Hello everyone, welcome to this video on the Nifty option chain analysis for the expiry of August 21st. Today we are going to take up a deep dive into the option chain data. Look at where the maximum call and put position are being built and identify the major support and resistance levels. If you are new to the option chain analysis, don't worry. I will also explain the basic in simple terms before moving into the live data. So by the end of this session, you will not only understand the current market positioning but also gain the skills into interrupt option chain data yourself in the future. Option chain basic refresher. Before we look at the actual data, let's quickly revise some important points about option chain. Strike prices. These are the levels at which option can be exercised. For Nifty, strikes are usually available at intervals of 50 points. Call options. Traders buy calls if they are bullish and sell calls if they are bearish or expect the market to remain below that level. Put option. Traders buy puts if they are bearish and sell puts if they are bullish or expect the market to remain above that level. This open interest. This shows how many contracts are open at each strike. Higher Y means more position are built at the strike. Support resistance from Y. AV put Y at strike. It is strong support zone. AV call Y at strike, strong resistance zone. PCR put call ratio. This is the ratio of total put Y to call Y. PCR greater than 1 means bullish position. PCR less than 1 means bearish positioning. PCR around 1 means range bound markets. Looking at the option chain, the spot Nifty level is around 24,600. Let's analyze from the downside upwards. First one, support zones. Puts at the 24,600 strike, we see a very strong put open interest of nearly 45,418 contracts. Traders are writing puts aggressively here, which means they expect Nifty to remain above this level. This makes 24,600 a strong support zone. At the 24,500 strike, put Y is the second highest, around 35,252 contracts. This is a significant bullish sign. It shows confidence that the market will hold about 24,500. Resistance zones. Calls. At the 24,700 strike, call Y is very high at 47,188 contracts. This is the immediate resistance level. At 25,500, call Y is even higher, around 64,146 contracts. That makes 25,500 a major resistance and also physiologically barrier. Other abbreviations. Other observations. At 24,800, call Y is around 40,000 contracts, adding another resistance layer. Below 24,000, put Y starts decreasing, which means support becomes weaker below that level. So in summary, the heaviest put Y is between 24,500 and 24,600, while the heaviest call Y is between 24,700 and 25,000. This creates a clear range bound market expectation. PCR and market sentiment. Total call Y 7,84,310. Total put Y 6,89,623. So the put call ratio 0.88. PCR of 0.88 indicates a neutral to slightly bearish sentiment. Since PCR is below 1, it shows call a bit higher than puts, meaning resistance pressure outweighs support. But at the same time, it is not extremely low like 0.2 or 0.3, which would indicate panic. There is still decent put writing, suggesting buyers are depending supports. Now we will compare option chain data with live chart. Here we have the Nifty 5 minutes chart with the hull moving average 21 period. Key levels are marked. Resistance at 24,701. Immediately pivot resistance around 24,613 to 24,634. Support at 24,485. Deeper support at 24,351. The HMA is currently sloping Sideways nearly 24,634 with price trading just below it. Why these levels matter? These levels align with the option chain AV call boy build up around 24,700, so sellers defending that level on the downside. Put voice support is around 24,500 and 24,400. The overall PCR of 0.88 gives sellers a slight upper hand. What price action is showing? Notice how the market rejected 24,700 multiple times with upper wicks. That supply dips into the 24,485 zone, bounced with long lower wicks. That is demand. Right now Nifty is sideways between 24,485 and 24,634 with a flat HMA showing consolidation. Three trading scenarios: range play, and one more is bullish breakdown and bearish breakdown. Range play: sell nearly 24,634 to 24,701 with stop about 24,720. Targets 24,613 to 24,485. Works best if call via 24,700 rises further. Bullish breakout: if Nifty closes above 24,701 on strong candles with no upper wicks, buyers can aim for 24,800 to 24,850. Needs confirmation with call unwinding at 24,700 and fresh put via at 24,700 or 24,800. Bearish breakdown: if price closes below 24,485 with strong red candles, expect a slide to 24,351. Confirmation comes if puts unwind at 24,500 and calls build at 24,600. Now we can create some strategies. Range traders, breakout traders, breakdown traders. Bullish view, bearish view. Come to range traders. Short near 24,634 to 24,700. Stop about 24,720. Target 24,485 to 24,351. Breakdown traders. Long about 24,701. Stop below 24,620. Target 24,800 to 24,850. Breakdown traders. Short below 24,485. Stop above breakdown candle. Target 24,420 to 24,351. Option overlays. Bullish view. Bull call spread 24,700 to 24,900. Bearish view. Call credit spread 24,700 to 24,900. Or iron fly around 24,600 if IV is an I.